Wall Street extended its sell-off on Friday as investors continued to weigh the implications of an escalating trade war with China after US President Donald Trump announced a plan on Thursday to impose 10% tariffs on an additional $300 billion of imports from China beginning on September the 1st. The S&P 500 finished the day at 2,932 points, down by 2.38% for the week. Of the 11 major sectors in the S&P, 8 closed in the red. Meanwhile, the Dow Jones Industrial Average notched a third day of hefty losses, closing at 26,461 on Friday, down by 2.42% on a weekly basis. The blue chip index extended its losing streak to 4 sessions with Friday's decline. The losses in the U.S. stock market came even as the U.S. Labor Department announced a solid pace of hiring in July. According to the report, non-farm payrolls increased by 164,000 jobs last month compared to 193,000 in June, which could give the Federal Reserve reason to cut interest rates again in September. Meantime, tech-heavy Nasdaq Composite dropped by 107.05 points to close at 8,004.07, with a 2.85% decline for the week. Technology companies, which get a sizable portion of their revenue from China, were the hardest hit. This sector was weighed by iPhone maker Apple and chip makers. Apple stock plunged by 2.12% on Friday to end the week at $204.20. For the week, the iPhone maker lost 1.45% in its value. However, it's getting more difficult to describe Apple as the iPhone company. In the latest quarter, more than half of Apple's revenue came from products other than iPhones. Quarterly iPhone sales slid to $26 billion year over year. But that decline did not matter to investors as the company's other businesses like services grew quickly. Elsewhere, ExxonMobil rose after its earnings beat analyst expectations thanks to big ramp-up of production in the Texas shale basins. However, on Friday, the stock price declined to end the trading session at $71.75 with a 4.24% loss week on week. And this was Weekly Financial Review on Insta TV. Stay tuned.